Welcome to the Efficient Private Clients podcast. We continue our discussion today on cryptocurrencies. Last week we unpacked what they are, some of the use cases, we spoke utility, and we finished off around risk-reward.
Risk-reward, yes.
And I think we need to look a little bit more today on investment cases.
Yes. So if you want to invest in something like this, I think most important is to understand, like you're saying, risk versus reward. Now, I think we've tried to explain now, you always get market risk. So everybody's exposed to market risk, then you get institutional risk.
Yes.
So you have to decide, will I be taking on this amount or this institutional risk? Now, if I choose between cryptocurrencies, I have to understand that Bitcoin has been there for a long time, kind of proven its track record. So usually what I've heard some of the investment advisors say is they do a 50-25-25 portfolio, so 50% in Bitcoin, 25% in large layer ones, Ethereum, Cardano, Solana, Matic and the likes, and then from there 25% in smaller projects, and then usually 5, maybe 10% in like really, startup, really venture stuff. So that's usually what they do. That's once you've made the decision that you accept this as an alternative asset class. That's the first thing. So how I try to position that is to say that it is something that's been around. There is utility, there is a willing buyer and a willing seller. What I didn't add is that the hype that drives this isn't something new. Hype drove up the prices for Land Cruisers as well.
Yes.
I mean, it's just a different form of hype. We call it scarcity. Now, what hype in this normal case of Bitcoin does is that there's a product, and now the demand rapidly increases for that product. The hype in terms of scarcity, like they did with Land Cruisers, is that the demand didn't increase. There was just fewer of the Land Cruisers available. So people bought them, they held them for 6 months, and then they just sold them before they drove them, and they made a lot of money. So why was that okay? The idea of a willing buyer and a willing seller is basically the same thing everywhere.
Yes.
So there must
applies.
be exactly. So for my Land Cruiser, it applies as the same as it does for my cryptocurrency. So the same economic fundamentals, as I wanted to say, apply. So make up for yourself. Is this an asset class that I should get involved with? I'm calling it an asset class now because we don't have a real formal definition. But because it has this appreciative nature, it does seem to be more like an asset class than just a currency.
Yes.
So decide, and then institutional risk, I would limit it to the 50-25-25 or even just Bitcoin to kind of get involved. And then you have to really, what is your individual risk?
Yes.
Now, individual risk is important to unpack, because that is, what risk am I willing to live with? Now, how I see Bitcoin, if I put it in traditional financial sector traditional financial sector, it's something between venture capital investments, like really startup investments that have like a 1% chance of success, and then something towards private equity, where you get like a company, it's not listed yet.
It has vetted results.
It has vetted results because it's been 15 years, like we said.
Yes.
So it's something in between like that. And usually you wouldn't invest more than 1, maybe 2.5% in venture capital. Private equity maybe up to 15%.
Yes.
So I would maybe cap, if I want to get involved with something like this, and I have disposable assets, I would look at something between 2.5 and 5% of those assets.
Yes, in your entire portfolio.
Of my entire portfolio. But that's individual risk, and then it's very important to understand that we can't yet give financial advice. So this is in no ways financial advice.
Yes.
We have applied, as I said, at the FSCA to get the regulatory approval to start giving financial advice and investment advice specifically on this. But then we always work as we do, because we're global investment specialists.
Yes.
So we work hand in hand with financial advisors. We look at your specific risk appetite, and then you match something like this, which is very, very volatile. Venture capital, always think about that.
Yes.
So 2.5 to 5%. And then if people want to start investing into cryptocurrencies, really look at where you're putting your money.
You need to avoid the scams.
Avoid the scams. Work with a reputable platform. Once again, these large platforms, Luno, Valor, Binance, and all these guys are starting to do application also at the FSCA.
Yes.
To invest, to be able to take people's money and then let them allow to buy these financial products, as the FSCA has now ruled. So make sure you have a reputable broker that you're working with, a very reputable platform, and then don't invest money you don't have.
Yes.
Don't borrow.
No.
Don't use the money that you're saving towards retirement for it. I usually say don't gamble, but if you are gambling, you'd rather use that money. Use all the money that we call it sin taxes. So all the alcohol, cigarettes, and gambling, and all those nasties that some people do. Use the other disposable income.
Yeah.
So remember what I tried to explain is that Bitcoin has utility, and the other things that you also purchase have utility. You buy a Coke, it has utility. You
derive pleasure from it.
You derive pleasure from it. So reduce those pleasurable things, and then invest or allocate towards something like Bitcoin.
If it has a sugar tax or a sin tax, you can reduce it.
That's exactly what I'm getting at. So if you do that, I think you can manage your individual risks with your financial advisors, with your financial advisor, and then start allocating towards something like a cryptocurrency. Now, what we expect, now this is always the question, is that because it is still a relatively new asset class, what we saw, the hype now is that there's another halving cycle involved. So Bitcoin gets mined. What that means is that you can get a GPU, graphics processing unit, and that's why NVIDIA's priced not just the artificial intelligence, but also their absolute ability to do very complex processing. So what miners do, Bitcoin and other cryptocurrency miners do, is they use these GPUs to mine the algorithm. So it's like breaking soil. Now you're breaking code.
Yes.
And if you break that code, the effort that you've put in, you get rewarded not in gold but in Bitcoin.
Yeah, you sow the land.
Yeah. So now you reap Bitcoins. So it's mined. Now the amount of Bitcoins that get released are now being halved. Okay. So the rate at which supply, and there's only a limited supply, I think 21 million, the rate at which Bitcoin is coming to the market is now once again halving. And usually, in anticipation to that, the bull run starts increasing once again. Because supply is limited, hedge against inflation, hedge against demand, the institution, and all that. So we're about 4 months away. March probably next year, 2024, you'll have that halving cycle, and usually then you get a 2-3 year bull run, 2 year at least bull run from that. So you're going to hear a lot about this, and that's why I thought it would be appropriate to speak about this now, so that our clients and our prospective clients won't be caught off guard and then fall for the hype. Then rush into it, then fall for the scam, then all that. So it's better to be educated now, so that you can take a stance now, so that you can dollar cost average. That's the same that we do with retirement savings. Every month on a fixed date, I put a certain amount into that. That's a lot safer way of starting to get involved in this asset class. And then because remember, it's just the same as any asset class, past performance are not indicative of future performances, but the utility seems to be rapidly increasing for cryptocurrencies. Rapidly, especially in this new era that we're going into, freedom of expression, and even in China that we've seen that their crackdown on freedom is really starting to show cracks. So there seems to be a large global demand for what cryptocurrencies can give to protect you against institutions, infringement and all that, protect your identity, etc., etc., etc. So the utility will probably increase, which means that the price should increase, which should increase hype, which should once again increase price. So I think it's something that people should at least be aware of, and then with the right information, they can determine, is it something that they should start investing in.
Yes, properly investing.
I don't know if there's anything else you've been wondering about in cryptos.
No, I think maybe something like FTX, because we spoke about reputation, we spoke about using someone legit. They're a little bit of an anomaly because celebrities were endorsing them. So how would we avoid that situation? Not to say it would happen again, but I'm sure
this is why I also believe, like some cryptocurrency proponents, is that you do need more regulation. You can't have mass uptake, like balanced fund uptake, real institutional uptake, if you don't have more regulation. You need to protect consumers, like the Banking Acts and all these other well-written, well-positioned regulations, not necessarily like we have in Europe, more like US regulations, that can protect consumers, protect investors against things like FTX. And remember, it's not something completely new. I mean, Wirecard, German-based company, 2020 or 2021, also stole, also unethical practices, also billions of dollars. Steinhoff, African Bank, you name it, SVB Bank. So it's a kind of a normal creative destructive process that we are involved with, but you have to be very vigilant now because we don't have enough regulation. So what I would usually advise clients is that consider the asset class, maybe wait for the regulation at least so that you understand, so that you can get proper financial investment advice on it and see how it fits into your individual risk rating.
Yes.
And then do the allocation or not.
No, that makes perfect sense. You've got to do your own research. Make sure you use investment professionals, or any professionals you have available to you, especially in the crypto space, and make sure you don't get Sam Bankman-Frieded.
That's it.